Good afternoon, traders and investors. Will back here with another one. Well, what a day we had today. Bit of a volatility spike. We were kind of expecting that after tightening up in this range, right? I was telling you guys, it's going to break one way or the other pretty hard, and it did. Fitch downgrading US credit rating from AAA to AA+. Black swan event? Gray swan? White swan? I'm kind of in the middle pretty much on a gray swan event, right? So at this point, guys, a lot of things to talk about today. We did have earnings as well. The market definitely didn't like it. That was completely normal. It happened about 30 minutes after I posted yesterday's video. I went out to dinner and came back to some pretty big news. I was anxious to talk to you guys about it. So we're going to go over that, going to go over the earnings, and also, as usual, go over my trades for the day. So without further ado, guys, let's get into our major news today. So obviously, if you guys didn't see already, US credit gets downgraded by Fitch rating agency. Obviously, there's three major rating agencies. We have S&P, right? S&P Global, Moody's, and Fitch. And Fitch was our outlier here, downgrading in a bit of an unexpected move, guys. If this was going to happen, there was a lot of talks about it happening back in May when there was the whole debt ceiling crisis, like they do every single year. They basically play chicken in Congress, Republicans versus Democrats, in terms of, budget spending and fiscal policy and whatnot. So this has been going on for a long time, and finally it now bites them in the butt. So we had a bit of feedback here from Treasury Secretary Janet Yellen, who's been pretty much in federal office now for so long, guys. So she definitely knows what she's talking about. And she said it was based on outdated data from the period 2018 to 2020. However, they reiterated, the credit rating agency reiterated, the rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance relative to peers, said Fitch in a statement, right? There's been a steady deterioration of standards and governance over the last 20 years, including on fiscal and debt matters, like we talked about, notwithstanding the June bipartisan agreement to suspend the debt limit until January 2025. So they're basically reiterating what pretty much I said in kind of layman's terms, right? They are tired of seeing Congress play chicken year after year, kind of battling what they're going to do with the debt limit, the budget spending limit, fiscal policy, and all that stuff. So it doesn't really, what it says to the world, right, is that the U.S. isn't able to solve their internal issues in a timely and reputable manner, right? So they want to see more of that. So completely normal that this happened, guys. So that's why I say not so much of a black swan. I was expecting potentially this back in May, June. The same thing happened back in 2011. We'll go over that in the chart in a little minute. But here's the thing, guys. It completely overshadowed the beautiful employment report that we got today. Today, 8:15 a.m., we came out with ADP employment. And look at this. The forecast was for 175,000 jobs created, right? We actually got almost double that, 324,000. But this was completely overshadowed, obviously, by the credit rating downgrade, right? So at this point, guys, we have to go back and look a little bit what happens here. Obviously, SPY, the very, very negative day here, breaking its streak. It didn't really have a minus 1% day, guys, in a long time. You'd have to go back pretty much 2-3 months ago at this point, back into May, to see a minus 1% red day on SPY. So let's go back and do a little bit of history diving, shall we? So let's go back all the way to 2011. The last time this happened was August 5th in 2011. You'll see it as this period right here, okay? So let's zoom in to the weekly here. And I just screwed everything up, so bear with me, guys. All right, we're going to go right in here to 2011 and see what happened on this famous August 5th. So obviously, you guys know the rest is history, but while it happened, it was really unexpected. So SPY as a whole, when this happened, you can see Monday, 1st of August, this is the week that it happened, right? Actually came down, brought the markets down before they recovered all the way down to this range, 12-13%, and all the way as low, all the way down here later there in October, all the way 17% almost from the moment in time that this happened. So it can definitely have a big impact. Largely, this market was coming out of a similar large downtrend, just like the one we just had, right? So obviously, it does really hurt markets when markets haven't fully recovered. But at this point, guys, the S&P 500 has recovered a lot more than it did when in 2011 versus 2008. So at this point, guys, do I think that it's going to have a very, very negative impact? Not that much, to be quite honest with you. Times are a lot different now than they were back then, of course. But we've been expecting a weekly pullback for weekly consolidation for a while now. Now, whether this move gives us a potential 4% drop or potentially all the way down to an 8% drop, bringing us back to the May kind of support level here, remains to be seen. Obviously, nobody can predict that. That's why we're going to take these things one day at a time, 1 week at a time, and we're going to see the patterns of highs and lows and where eventually this thing bottoms out. But if you ask me my opinion, black and white opinion, I don't think that this is as bad as people are forecasting here, okay? So that is pretty much it for that. Now, what I do want to go over, guys, just before jumping to the charts here, we're going to go over some earnings very, very, very quickly here. So as you can see, guys, today we had PayPal, Shopify, we had my Generac this morning before the open. I don't own shares, but they got absolutely destroyed. We had Qualcomm, Oxy, Unity, and Robinhood after, and some Etsy down here. So I'll only take you guys through a few of them, okay? I don't want to go through all of them, obviously. We'll cover them briefly on the charts, but I want to cover PayPal first, right? So PayPal, what happened with PayPal today? They obviously got destroyed once again after earnings, down 7%, all right? 7%, so they're all the way down here to $68 in the after hours. Now, PayPal, in my opinion, had very good earnings. It's just that Wall Street just does not like this stock. They haven't liked it for a while now. You know, you can see the same thing that used to that happened on the Netflix chart, right, where they literally couldn't do anything right. And you also saw it on Meta. So this company, PayPal, reminds me a lot of how the sentiment around those two companies was. It's just PayPal hasn't had the recovery story yet. So let's get into this quickly here. So PayPal, you will see stock falls as earnings beat, but a margin metric misses. The margin was the only thing in the entire earnings report that missed, and it missed by so tiny that I'm very surprised that PayPal got a 7% hit in the after hours here. So looking into PayPal earnings here, guys, you can see that revenue increased 7.29 billion from 6.81. Very, very good. They beat expectations of 7.27. They logged 376 billion in total payment volume for the period. That is huge, guys, right? They have over 400 million active users. So we can definitely know that this company is processing a lot of volume, right? And we also had a comment by the CEO here. We have high confidence that our business is on the right path. We're seeing clear signs that the investments we've made are paying off. So very good. But the one thing, the only thing, because they gave good guidance for Q3 and Q4 as well. The only thing that was wrong is they had an adjusted operating margin of 21.4% for the second quarter, below the 22% outlook. So for a 0.6% margin decrease, right? The only thing in the report, and I guarantee you guys, the only thing, PayPal is down 7%, right? So a bit of an overreaction in my humble opinion, if I do say so myself. I'll take you guys through a few charts that I want to show you on PayPal, right? So PayPal obviously has a global two-sided network at scale and is one of the world's most trusted brands. It is, guys, right? So 400 million active consumer accounts, 35 million active merchants accounts, 1.4 trillion in total payment volume, right, for the year, $24 billion in payment transactions. Absolutely massive. They're in 200 plus global markets, 150 currencies, right? So very, 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 very large company. And I do think that they will do well over time, right? We have total payment volume, which has been steadily increasing every single quarter for the past 2 years. So you really love to see something like that, right? I also want to bring you down to this chart right here, right? The revenue also. Revenue steadily increasing despite the little hiccups that they did have. Revenue does remain on a strong uptrend here, 7% and 8%, right? Foreign transactions and 7% spot here. Non-transaction operating expenses declined 11%. So they're doing a good job at cost management here. Operating margin expansion, right? We're still in the 20s and they do forecast remaining in the 20% plus operating margin. So that is also very good. We have a steady increase here over the past year of earnings per share, right? Now over $1 in EPS. Very, very good. Free cash flow took a bit of a hit here because of the deal that they've conducted with KKR. I'll spare you the details here, guys, but if you were to remove, so what they did basically is they're offshoring their buy now, pay later business here. But if you were to take that business into account, I know this number says negative for free cash flow, but if you remove the impact of this, they're actually still at positive free cash flow. So good on that. And also, the last one I'll take you guys through here is they are steadily repurchasing shares. Even this year, they've allocated up to about $5 billion in share repurchases, and they've already done $3 billion in share repurchases repurchases year to date. So this company is very good, and the management does believe in it enough to continue to buy back shares. So in my opinion, humble opinion, guys, overreaction. I am definitely increasing my position in PayPal down here, and you'll see what I did at the end of the video with my trades, right? Second bit of earnings that I wanted to go over, Shopify. Shopify, right? Shopify was actually a total reversal. So they had a terrible day, down 7.44% on the day, obviously because of the US credit rating news here. But I want to show you guys in the after hours what happened with earnings here. We had a massive pop, over a 7, almost 8% pop. It gave it all back almost instantly, and now we're trading pretty much around where we closed, slightly under here. So Shopify here makes progress on free cash flow, but stock moves lower after earnings, right? So they did post very, very decent numbers here, guys, right? What we're going to look here at is the revenue jump from 1.69 billion from 1.3 a year prior. They beat consensus of 1.63, right? Their gross merchandise volume, okay? So how much orders they process. $54 billion almost, slightly below analyst expectations of 55, right? And 31.7 billion in gross payment volume. So very, very, very good numbers by Shopify, if I do say so myself. They also generated free cash flow. So this is a company that for a long time was generating negative cash flow, but now they're actually back to positive, right? So very, very good here. Very, very good report by Shopify. Nothing really to pick apart here. They gave decent guidance for the next quarters as well. It's just that in this market, guys, if you're not completely outperforming, keep in mind, these companies have come up a lot off their relative lows, you know, where they started the year at, right? So this company, up until pretty much earlier, 2 weeks ago, was almost up 100% year to date. So it's normal. If they don't come out with absolutely blow out of the water numbers, right? It's not going to be good enough. And that was the case for PayPal, and it is also the case for Shopify. Their numbers are decent, really nothing to pick apart, guys. Like there's no red flags whatsoever that I saw in either report. However, they're just not good enough to give that outstanding rating to them, which is why you're not seeing them pop 5-10% after hours, right? So I'm very unfortunate on both companies for that, but these companies are companies that I do believe in. Shopify, bit rich for me. I'd like to see it in the lower $50 range for me personally to be attracted to it once again, but fairly decent earnings report from both of them. Now, let's jump into some charts. Let's jump into the indexes, and we're going to go off to big tech here as well. And lastly, my trade. So S&P 500, you guys can see here on the day, not performing too well, 1.39% to the downside. Heat map should be of no surprise. The only thing, and I'll show you guys this too when we get to it, the only thing that held for the day was healthcare. Everything else completely obliterated, pretty much. Even value, completely obliterated. You'll see it on the one-day relative performance, right? Technology always taking the cake, right? But this was a complete destruction of the markets today. Fear-induced selling, right? Repositioning by institutions in light of the downgrade. Now, what are we dealing with here, guys? Well, I told you guys that the 452 area here was the area to watch. We've now lost this. So unfortunately, daily downtrend is now confirmed. It's the first daily downtrend, guys, since pretty much you have this one right here, which is arguably not even a daily downtrend. It's kind of more range-bound action. But arguably, like in the last 3 months, this has been the first time that we have convincingly lost a daily uptrend. Like even this, right? We had the lows set here and we made a higher low, and that was your daily uptrend continuation here. But obviously now, guys, we're in a daily downtrend, so we have to look higher. Weekly consolidation is underway. First target for me, your EMA 12 right down here at around the 440 level. That's going to be a key area to watch. Obviously, we have more horizontal support down here at 432, but your first target should be this EMA 12. So we're going to take this one day at a time. Daily downtrend is confirmed. They've now cracked the lows. Remains to be seen. Can the bulls put in a bounce tomorrow, right? A lot of our lower time frames, such as the hourly, completely oversold here. 4 hours almost oversold, right? So it remains to be seen how nice of a bounce we can get tomorrow. But at this point, guys, any bounce is just going to be for a lower high for potential continuation into our weekly consolidation, which is underway. So it remains to be seen, guys, if institutions and investors continue positioning, continue taking profit down off of this credit downgrade, we could see some future downside here. But like I said, you really want to watch out for your number one area, the 440 area, this 12 EMA. Look, we haven't really lost it since we started gaining back here in March after this whole banking crisis, right? So stop number 1 is right there. QQQ. QQQ, same thing, right? On the daily, we have now lost the daily uptrend. Daily downtrend is confirmed, right? Lower high, lower low at this point, okay? So daily downtrend is completely compromised. We've lost the 12 EMA on the daily, but you guys know, like I've been saying, the bears' inability to follow through has really done damage to them in the past. So it remains to be seen if the bulls are going to be able to reverse this. We have Apple and Amazon earnings tomorrow, so they have a lot of weight on their shoulders. But same thing, daily downtrend to the bulls. So at this point, you have to expect potential further continuation. If Apple and Amazon don't do well, you're definitely going to get it. And then we're expecting the bounce for the lower high and for further continuation into weekly consolidation. So that's just how I'm positioning myself. Anything, obviously, anything that the bulls can do to reverse this, right? I will change my tune, but now you have to follow the trends, and the trends is daily downtrend at this point. Keep an eye out for your 12 EMA. First stop for me, 363-ish, right? On QQQs. Look, still, ever since March, banking crisis, we have not lost this 12 EMA. So this should be the first area that you're looking for buyers to step in. But weekly consolidation now is definitely underway. Healthy, in my opinion, because now, look, just with this 1 week, 1 day action, we're no longer overbought on the weekly RSI. So very, very good, but we're going to take this 1 day at a time, guys, right? It could be very possible that we set up like this and then the bulls could just engulf and reset the daily uptrend to the outside. That's why we take these things 1 day at a time and we wait for stocks to come to us. So we'll go over the tech levels in a bit here, but we're going to wait for this market to cool off and come back to us. All right. So XLF here, XLF. Still in search, guys, still in search of the daily higher low, loss of the 12 EMA here, right? So if this move does continue to push down here in this fashion, right? Not arguably a daily downtrend, in my opinion. We haven't had a heavy enough bounce. If we do something like this and then flush, that would be a daily downtrend for me. But at this point, anything still above 34.20 is just going to be searching for that daily higher low for continuation. Resistance always staying put between $36 and $37. If we do end up setting the daily downtrend, keep an eye. We're looking on the weekly, just looking for a weekly higher low. Anything above 32.50 is just going to be for your weekly pullback, setting the higher low for a potential future bull move up. Okay, so XLF still looking healthy, still no real red flags in my opinion, even though we had a bad day today. XLV, I want you guys to see, right? XLV, when the markets were absolutely plummeting this morning, XLV from yesterday's close was actually up almost 0.8%. So XLV is the only one that had healthy rotation today. XLV, same thing, still watching for the daily higher low, guys. Anything above this level here, 129.66, 130-ish, is just going to be for your daily higher low. I do think that XLV still has a good chance of pushing. We're also looking for the weekly higher low. I'll remind you, coming down into these moving averages right here. So should be getting some decent support here soon if we do continue to move down. But anything, once again, above 129, going to be for the daily higher low for future continuation of the upside here. In my opinion, no real red flags. Bulls still have a lot of space. You just don't want them to come down all the way into the 131 area, because then that might set up, once again, somewhat of a tightening range. So they really need to get a stop here, you know, probably in the high 132s is the area that I'm looking. Confluence with this horizontal support. IWM Russell growth stocks, obviously not a great day today, just like the NASDAQ, right? So down, still challenging in this resistance area, losing the 12 EMA slightly. So once again, guys, we're still trapped in this range at the high of the move. If for ever which reason we break 193.15 down here, you're looking for weekly consolidation. Anything above 180.5 is just going to be a weekly higher low for a potential move back up. If we cannot crack this resistance while we're here right now, in my opinion, the likely scenario is going to be weekly consolidation, accumulate potentially down here, and then have another stab at it, right? So bulls looking still healthy, guys, looking still healthy on the longer time frames. It's just short term. We're having to deal with a lot of chop zone. Keep in mind, this is a very, very big area of resistance, right? So if we can't break it this time, we're going to need to reaccumulate and potentially have another go at it. Growth stocks obviously getting destroyed today. Dow Jones also coming down near the lows here right now. 35,220 is the area to watch. We're right there holding the 12 EMA ever so slightly. I just want you guys to see that if ever we lose these lows right here, right, we are just zooming out. So when we lose the lows on the dailies, guys, zoom out. What are you looking for? Like I've been saying, just looking for the higher low on the weekly, guys. Tons of space. Anything above 33,700 is just going to be your higher low. We have, look at this support line. Tons of support down here. The moving averages are here as well, right? So in my opinion, nothing to be fearful yet. This is just healthy market consolidation. So look out for it if we do continue to drop, guys. And obviously the bulls can save this. You know, we're kind of doing like an IWM, right? We're ranging at the top of end of this move here. So, you know, healthy consolidation for the markets, in my opinion, guys. But if we do get more downside, I won't be surprised. Still not a loss of the daily uptrend yet, barely. But if tomorrow's a red day, we will be losing it, potentially setting up for the daily lower high and maybe daily downtrend, which sends us into further weekly consolidation. But like I said, so much support down here, guys, that I'm not nervous. Bitcoin also getting killed today, right? So no surprise there. Basically reversing all of yesterday's gains. Bulls still trying to fight back at this point, right? So daily downtrend is confirmed. We had to push through, but the bulls were able to recapture yesterday. Now we're still stuck, right? As long as we can't close, guys, above 30,000 again, we're really, you know, set up for downside continuation, right? Need to see the bulls make a push above 30,000. Then I'll reverse my tune. On the weekly, we are still looking for the weekly higher low. This is still a weekly bull flag, but now at this point, guys, it's been 6 weeks of consolidation. Really boring chart on Bitcoin, kind of trapped here, right? Downside targets remain 28,500 all the way down to 28,000, but Bitcoin doing a whole lot of nothing. Now, Apple losing the 12 EMA in a convincing fashion 1 day before earnings, guys. So this level that I marked here on my chart, 191.50, key previous low, right? Tomorrow's earnings is going to do it. We're either going to flush and pull a Microsoft for a potential daily downtrend, or we're going to crack the new all-time highs and move higher like Facebook did on their earnings, where they completely recaptured a down move swing. Now, Apple key level, obviously not going to give you guys too much technical analysis because earnings is tomorrow, right? So keep an eye. 191.50, guys, is the line in the sand area. If they lose that, daily uptrend is lost. They create enough space to set up for a potential daily downtrend. If we get a daily downtrend, no problem at all. Just zoom out, guys, zoom out. Tons of space. Tons and tons of space, guys. Anything pretty much above, like, geez, it's all the way down here, you know, like 163 is where I would put the higher low, right? If you want to be really stingy with it, you can say, well, you can argue it's 171. But anyways, it's a long way away, right? So keep an eye, guys. First target, the 12 EMA, right? You can see how long we've not lost it in pretty much since the beginning of the year, right? So 186 is your second target. This would just be healthy weekly consolidation. Bulls with a ton of space. My weekly higher low is all the way down here, guys. So tons of space. If we do pull back for the next few weeks, keep in mind, if we keep pulling back, guys, into the 180s, my sweet spot, 175 to 170. AMD, what a day for AMD. What a 24 hours. They were up 7%, right? Gave a bit of it back yesterday after earnings, and now they were down 7% from yesterday's close. Total move top to bottom, guys, 14.5%. That is a big move top to bottom on AMD. So AMD obviously reversing all of its earnings gains and more. So now let's take a look, guys, where we stand at the chart here. We are still maintaining these lows. Look, it tried to push below them today, right? This whole 107.60 area, which is the area you really can't lose, held it today. Remains to be seen if they continue to do so, right? So we're kind of trapped in this whole range right here. If the bears flush, you will have your daily downtrend resumed. If they get the daily downtrend, if we flush this zone, it will be a weekly downtrend confirmed as well. At that point, guys, I'm looking for support all the way down closer to $100 in that area if we do flush this area in the next few days. Like I was showing you guys on the monthly, no problem at all. This is a confirmed monthly uptrend, still looking for the monthly higher low, right? 3 months now we've been consolidating, looking for the monthly higher low. That's why I say this little pocket here, my green area, you have the 12 EMA monthly at 98, and this whole little horizontal support area between 104 and 100, my sweet spot. So if we do come down to there, guys, I'm definitely looking for it. Bulls now at this point have a lot of work to do to regain the daily uptrend. They had done a great job here. We were expecting potentially a higher low, but with earnings and the news today, credit rating agencies, they got absolutely flushed, couldn't set the higher low and move higher. They just really cracked these lows here. Now we're having to rely on the weekly lows here. Not looking the best for AMD, but like I said, I'm getting excited. If we do come down to this area, I'm definitely buying. Amazon, horrible day for Amazon as well. But like we were saying, guys, this is up to earnings, right? You remember me saying on Monday, if you watch Monday's video, if the bears take back too much of this move before earnings, a flush of this area gets more and more likely, right? So the bulls had put in a great move here, but unfortunately last 2 trading days, they've got completely obliterated. We're now close to the lows. Earnings is going to be key tomorrow, guys. We're either going to flush these lows. If we flush these lows, keep in mind that would be daily downtrend, right? High, low, and lower low potentially tomorrow after earnings if they do flush. So daily downtrend would be underway. If we get a daily downtrend, I will remind you, you are zooming out at this point, guys. Zooming out, my area of support is pretty much down here below 120. My sweet spot, 118 all the way to 114 for this stock. If they do flush here, guys, it would be a loss, right? Loss of the weekly uptrend as well, but still decent amount of space, guys. Even if we do pull back on Amazon, you're looking for your monthly high or low, anything above 89. So much space looking for the monthly high or low here. So bulls in big control of the longer time frames. Earnings tomorrow is crucial on Amazon, right? So a lot of things to be looking for tomorrow. I don't want to say too much before it does it, but if we do move and crack below this, guys, bulls are going to have a lot of work to do, right? They're going to have to put in a heck of a bounce to reset a daily uptrend, right? Because at that point, we'll be in a daily downtrend. And when we do bounce, we're just expecting for a lower high below this high. And we will have this whole area now acting as resistance if we go under it, right? So keep that in mind for Amazon. Google also pretty much bad day for Google here, down 2.5%, just like Amazon, reacting to our horizontal previous support level and our 12 EMA right here, right? So the bulls playing some good defense when we got there, but we came down into it hard. Still good. Anything above 118.77 is just a daily higher low. We have a lot of support, right? This whole chop zone here, I drew a line there, but it's actually a range of support, right? 128 to 126 is pretty much your area that bulls have to work with here. So I know there's a gap down here. If markets continue eroding and not playing out well, we may come all the way down to fill the gap, but there's a lot of space, guys, right? A lot of space for the bulls, 118.77. That's still, the bulls can drop, another 7%, and we're still looking for a higher low. It won't be pretty, but that is just the charts pretty much, right? So on the weekly as well, weekly, if we continue pulling back, guys, we're just looking for anything above 115, this low right here, to be your higher low on the weekly. So higher time frame bulls, even on the monthly, guys, if we pull back on the monthly, I'm looking for this sweet spot here. If we continue pulling back, I'll be looking for Google under 120. But I do think for the long term, Google is set up very nicely. The bulls still in control, unlike a lot of our other tech names. Meta coming down as well, was not spared, 2.5%. What are we looking for, guys? I drew the line yesterday, right? Anything above 288, this low right here, is just going to be your daily higher low. Still holding the 12 EMA fairly decently here. So a lot of space for Meta to work with, similar to Google, right? That's due to their very nice earnings that they had. But keep in mind, guys, the further we drop on these charts, right, the more likely the scenario becomes, at best case, a tightening range, or at worst case, loss of the daily uptrend into a daily downtrend, weekly consolidation, just like the markets, right? So keep that in mind. We're going to watch this chart one day at a time. But as of now, the bulls putting up a good amount of defense here, consolidating near the highs. But like I've always told you guys, right? When you take back too much of a move, you set up for either a tightening range at best or a daily downtrend. Very rare will you get an engulfing move of the entire bull upswing and then V-shape. Especially if you don't have earnings or anything like that, right? Very rare. We're going to keep an eye on this, obviously heavily correlated to QQQ. So if SPY and QQQ remain in daily downtrends into weekly consolidation, some of these stocks are going to start losing gains as well. Microsoft, daily downtrend, resuming, right? We were saying this yesterday, that the likely scenario off of this move down was a lower high for potential move down. It's a daily downtrend, so you have to play with the trend. Until the bulls are able to do something like this, put in enough space, my most likely scenario becomes the continuation to the downside, right? Toying with our support level here, 327, right? 327, this whole area, 327 down to about 322 is a very big level, but now we're kind of breaking through here, guys. So daily downtrend continues to be the case for Microsoft. On the weekly, what does this look like? We are definitely in weekly consolidation at this point, right? So we're going to see in the next few days, this is very crucial stuff, guys. Going to see in the next few days how these charts play out. But Microsoft working with a lot of space, guys, 275. is pretty much the low of this weekly move, right? So anything above that is just going to be looking for a weekly higher low. Even on the monthly, so much space. I was telling you guys I didn't like how this candle closes. Now we're getting follow through into August. Can we come down into my sweet spot, right? 310 all the way down to 285. Well, I don't know. I don't have a crystal ball, but I'm just following the weekly and daily trends. And if we do come down into here, you best believe I will be writing some options. So once again, we're going to take this one day at a time, but Microsoft continuing on the daily downtrend, still not bottoming out. Now we're going to go to NVIDIA. NVIDIA, terrible day. They were able to recover a bit in the a bit towards the end of the session here, but I mean, geez, like from yesterday's close, right? We were down at one point, you know, almost 7%, recovered a bit into the end of the day here, but NVIDIA not looking too good, guys. We almost closed and lost our area down here, but the area that I was targeting yesterday, 440, 442 is flushed. Daily downtrend is live, right? So we lost the 12 EMA. I was telling you guys, we're tightening up. The best case could be a tightening range. The worst case is your daily flush into daily downtrend continuation. It's exactly what we got. So daily downtrend confirmed on NVIDIA at this point, guys. Now what do? We zoom out to the weekly. Weekly consolidation is underway because we lost the daily downtrend. 400 is going to be an area you're looking out here for the weekly higher low. The more the bears put in here, the more likely scenario you get a lower high on the weekly and potential for consolidation. If that happens, we're going into monthly consolidation, right? And like I was showing before, NVIDIA can do this. They can consolidate for a while and continue to rip up afterwards. So is it time for monthly consolidation? Could be. Like I was saying, I don't have a crystal ball. We're going to follow this one day and 1 week at a time. But for now, the daily downtrend is confirmed. We have not got a daily downtrend on NVIDIA for a very, very, very long time. Since December, pretty much, the daily downtrend has not been set. Well, now, this is the first time that it's actually been set. So we'll see how far the bears can run with it. But at this point, guys, we are expecting further downside. Any move up is just going to be for a lower high compared to our high here of 471 for further continuation until the bulls can put in enough of a move. You'll see, just like uptrends, guys, what the bulls need to do on all these charts to reverse it, they need to put in a big enough of a move to then set a higher low compared to here and then reverse to the upside, okay? But until we get that, guys, the daily downtrends are in motion and we are in weekly consolidation for further downside. Keep an eye, 12 EMA down here at 410, and we got this our weekly higher low here down here at 400. Tesla coming down as well, right? 254 on the day. So we did lose our area of contention, guys. I was telling you, cannot lose 255. Well, they went ahead and lost it today. So it was said to be, right, whether we're going to get a tightening range here. But what was I saying? Whenever you get a tightening range here on the daily at the lower end of this move, it is a weekly bear flag. Weekly bear flag has now confirmed, guys, at this point, right? So continuing to push the lows on the weekly chart. 240 is now your next area of support. Keep an eye, the 12 EMA here is your first line of defense, 245 all the way down to 240, right? If we flush that level here, well, monthly consolidation is underway on Tesla. It's already pretty much monthly consolidation in my opinion. My sweet spot, 230 down to 210, right? So on a technical basis, guys, we've now flushed the lows. The daily downtrend, unfortunately, is resumed on Tesla. So it remains to be seen where the bulls are going to be able to put in a stop. If we continue down like this into my sweet zone, and then we get a nice bounce like this, and then they set the higher low and crack, you'll have a recapture of your daily uptrend. But until then, guys, you have to give the bears credit. The daily downtrend is set. Weekly consolidation is in motion. My sweet spot target, once again, 230 down to 210. PayPal, we went over PayPal briefly, but I'll go over it again, right? So PayPal, we're going to look at this chart very, very, very quickly here, but you can see $68 in the post market here, down 7%. We were saying that anything above these two lines here, right, pretty much $65.50, $66 is going to be your weekly higher low. So it remains to be seen, guys, if we can maintain that. But now the bears have taken back so much of this move that we may just end up getting a tightening range like PayPal has done in the past, right? Tightening ranges. So it remains to be seen if we get that or if we set up for the weekly downtrend. We're going to take this one day, 1 week at a time. But obviously at this point, guys, especially with the moves in after hours earnings, right? loss of the daily uptrend is confirmed. At this point, on any bounce, we're expecting lower high compared to this for further downside, right? So keep an eye out for the bounce. Even though I like PayPal as a company, they have a lot of work cut out for them now to reset the daily uptrend to the bulls. And now finally, Palantir also with a negative day here, not ending so bad, to be honest with you guys, right? At one point today, Palantir was down almost 10% and recaptured nicely, only ending down 5. What we're looking for on Palantir, anything above 16 is going to be your daily high or low. So bulls still healthy, playing good defense down here, but you don't want to see them take back too much of this move because could set up for a daily downtrend. But as of now, bulls still in control of this chart. You like to see it. They're respecting your previous resistance, which is now horizontal support. So we're going to take this one day at a time, guys. But as of now, bulls still in full control, still just looking for your daily high or low for continuation. Keep an eye out. Palantir earnings next Monday. Very, very interesting. And lastly, guys, I'm going to go over my account here. So account obviously took a little hit today, right? Down to 56.6%, which is pretty good. We didn't lose as much as the NASDAQ did today, right? But still down on the day here. So S&P 500 about 19%, we're up 56. So still decent, almost a triple, right? NASDAQ as well. You can see, guys, that we're, sitting right here. NASDAQ, you have to take 2% off its recent number. So we're 56 here, and NASDAQ should be down to about 35, right? So not quite a double as well, but still decent performance. On the day for the trades today here, guys, let's have a look. We're still in our AA 34.5 puts. Obviously, AA has come down a lot today with the day's move. Obviously, the entire market falling apart. In the risk of being assigned at 34.50, we're currently sitting under 34. So remains to be seen if we'll be assigned on those. CSIQs as well, right? We have the 35s. The premium's jacked up a lot on these. CSIQ is just under 35 at this point. Actually, we closed above 35. But still, decent down day for CSIQ. Most of solar did get hit today as well, so no surprise there. But we're still 9 cents, out of the money, so still have a bit of a cushion. But if we do get a sign, guys, I don't really mind. I do like this chart. Their PE ratio is pretty much 8. So very decent company here, if I do say so myself. Obviously, we have a lot of support down here as well if I do get a sign. Tesla still holding on. Now we're profiting on these covered calls that we rolled last week. So I'm going to keep these on as long as Tesla keeps dropping. And now you see why, because we get some decent hedges on even when Tesla is dropping. So you can see the loss is now just under $800 on the shares versus the covered calls. So every week that we roll these, we get a bit more premium. We start to narrow the loss. And eventually I'll take these off when I do believe that Tesla is near a relative bottom. AMDs, right? So we had the AMDs yesterday for earnings. We had the 104s. You guys see that I did close them here. They're at positions at 0. And the Starbucks also 0. So how did that play out? Very good. So you see AMD, we closed them this morning at 3 cents. We wrote them on Monday at $1.04. Closed them this morning at the open before the big drop at 3 cents. So got $1 each, $200. Easy money if I do say so myself. And the Starbucks, you see I wrote them here, one for 67 cents, one for 28 cents, right? We closed them both. We closed the 95 at 5 cents and these at 2 cents. So all the money has been realized on Starbucks as well. So decent day in terms of realized profits, if I do say so myself. Nike 109s still in jeopardy of being assigned. And I did take a little cheeky other position on AMD when it was down to about 108 today. I wrote the 103s again. So playing a lot of AMD this week, wrote the 103s. Where are the 103s? You guys obviously know. They are in my sweet spot at this yellow line right here. So you can see that we picked up about $34 for this one, and now they're down to 19. They were as low as 14, but I'm probably going to hold this one for an extra day and try to get all the premium out of it as I possibly can. SEs as well, also in jeopardy of being assigned 63s here on SE. Only one contract though. I've left myself room to average down into the 50s if we do get there, but SE $63. And we're now under that. So will I be assigned, just like last week? Will I be assigned some positions? Will I not be? We will see come the end of the day on Friday. And if I have to write covered calls, I'll show you guys how to do that too. So that was it for today's video, guys. I hope you appreciated it. If you did, consider liking the video, consider subscribing. I hope you guys had a beautiful trading day, and please don't get too nervous. We've been expecting weekly consolidation for a while now. It shouldn't be any surprise. If anything, I hope that I've conveyed that the bulls control the larger time frames. The economy is healthy, okay? There's no need to panic, in my opinion. This is just going to be short-term drawdown. Even if we get bad inflation numbers in 2 weeks here, it's to be expected. I've mentioned to be on the channel, right? If we have to pull back here on the markets for a month or even 2 months, August and September, it's fine. We have so much space to work with, guys. It's completely fine. You can see it's happened in the past. 2 months of pullback, right? You could say, well, Will, this was 2020. It's an outlier. Okay. The 3 months, right? The little interest rate crisis here back in 18, pretty much early 19. I don't know if you guys remember that. I was in the markets. 2 months of pullback here, right? A couple months of pullback here. You can see what happens every time, guys. We can't just go up in straight lines, right? It does pull back for every 6, 7 green months in a row. You get 2 months of pullback and then you resume, right? So Q4 this year, I think is going to be a very, very good Q4. So don't get too nervous, even with these negative headlines today, right? Black swan, it's more of a gray swan for me. The swan's not fully black. Right? So just keep that in mind, guys. The bulls control the larger time frames. Inflation is long-term downtrending right now, right? I know interest rates are high, but they will also start coming down next year as well. Everything is fine. If anything, view this as a buying opportunity. So take care, guys. I'll see you tomorrow after the close. Peace.